Hi, welcome. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m. noon and 7 p.m. Eastern Standard Time. Boldly put, holding XRP until $1,000 might sound like a wild dream, almost meme-worthy, but today it's a conversation we can't afford to skip. At the time of this recording right now, XRP is preparing to push back above $2.70. It's consolidating a triangle formation. Once it can break above $2.95, all-time highs will be in sight with a potential year-end target of $3.85 to $4.30. Think of it like a river, finally breaking through a dam. The flood is coming and you want to be ready. While the headlines scream chaos, government shutdowns, trade wars, global uncertainty, XRP is setting the stage for what could be its next major rally. And let's be clear, this isn't financial advice. It's financial perspective. We're analyzing the setup, not predicting exact numbers. Now let's look at the bigger picture. Word is circulating that a new China trade deal may be imminent, potentially rolling back the 100% tariffs imposed previously. If this happens, markets could rebound almost overnight. Add in the potential resolution of the government shutdown in the US, and the conditions are lining up perfectly for risk on assets, including crypto, to surge. XRP has already been one of the few assets outperforming consistently this year. Let's look at the global macro setup to understand why XRP could move from two astronomical levels like $1,000. We need to examine the macro environment. The global markets are holding their breath right now. On one side, trade tensions between the US and China are finally beginning to thaw. On the other side, the US government shutdown has kept investors cautious. Both are massive forces shaping sentiment right now. When uncertainty starts to lift, capital tends to flow back into risk assets, and XRP, as one of the most utility-driven digital assets, stands to benefit disproportionately. Treasury Secretary Scott Bassett recently confirmed that China is ready to finalize a trade deal, potentially removing those 100% tariffs. Historically, when trade tensions ease, like in the 2017 US-China negotiations, the markets reacted sharply quickly, often doubling or tripling assets worth in weeks. The same principle applies here. China also announced a one-year pause on rare earth exports restrictions, a critical move for industries ranging from electric vehicles to semiconductors. Less pressure on global supply chains means more stability, which historically fuels risk-taking across markets. XRP, being integrated into cross-border financial flows, is uniquely positioned to capitalize on this kind of macro environment. Here's where it gets particularly interesting and spicy. While mainstream media is obsessed with headlines, some of the biggest moves are happening quietly behind the scenes. The Mellon family, a lineage with deep roots in the American banking, is making headlines again. Timothy Mellon recently made a $130 million donation linked to military initiatives. This echoes the early moves of Matthew Mellon, who years ago invested millions in XRP when it was still undervalued and stored the tokens across multiple secure wallets. Matthew Mellon was a banking heir who made a fortune in cryptocurrency by investing millions in XRP when it was undervalued, turning his initial $2 million into a reported $1 billion. This is more than coincidence. The Mellon family represents the type of institutional memory and influence that can drive capital flows into emerging digital assets. Historically, when old money aligns with new technology, markets often explode. Think of the early adoption of the internet by established investment firms in the late 1990s. XRP could be experiencing a similar alignment today. XRP fundamentals and Ripple's roles. Now, let's dig into the mechanics of XRP itself. Ripple's strategy has been methodical. Monthly XRP distributions through Ripple and Chris Larson's treasury operations are being directed toward enterprise systems like Evernorth, ensuring demand and liquidity are structured rather than chaotic. Unlike typical altcoins, XRP supply isn't dumped onto exchanges. This controlled distribution is reminiscent of historical commodity scarcity plays like gold in the 19th centuries. Limited supply with rising demand creates natural upward pressure. Ripple has also made strategic acquisitions including G-Treasury and Hidden Road. G-Treasury handles settlement for over 13,000 institutions, managing nearly $12 trillion annually. While Hidden Road clears over $3 trillion as the largest non-bank prime broker in the US, these acquisitions are more than corporate maneuvers. They embed XRP into global financial infrastructure. When combined with the anticipated ETF inflows, supply-demand dynamics are setting up a classic squeeze. November 13th is coming soon, and with Canary Capital's ETF expected to go live, it's going to be wild. Currently, there are 7 spot ETFs waiting for approval. Gayscale Shares, Bitwise, WisdomTree, CoinShares, Franklin, and the Rex Osprey ETF, which is already live with 100 million in assets under management. Historically, ETF approvals for emerging assets often trigger multi-billion-dollar inflows, especially from retirement accounts, hedge funds, and institutional investors. When these inflows hit a tightly controlled supply, price appreciation is almost inevitable. Looking at XRP's chart, the $2.70 to $295 zone is critical. This area is a massive resistance that has to be broken and confirmed to signal an eventual move higher. It's in a consolidating triangle formation, analogous to historical stock market setups like Amazon's 1997 consolidation before its first major breakout. The behavior suggests the market's ready for a large move. Open interest in XRP futures recently reset, removing over-leveraged positions and clearing weak hands. The last time we saw a similar pattern in May 2025, XRP surged from $70 to $3.50 in weeks. Strongholders remain. Spot demand is high and trap shorts create the conditions for explosive rallies. Historically, such resets precede significant market cycles. So now the key question, how do you position yourself to hold XRP for the long term? Hold till $1,000 isn't just a meme. It's a metaphor for discipline. Every major crypto wealth cycle rewarded patience, strategic positioning, and emotional control. Those who chase hype or sold in fear often miss the upside entirely. Diversification is essential. Investors shouldn't rely solely on XRP as a lifeline. Parallel income streams from businesses, real estate, or yield-bearing assets allow holders to maintain their positions even during volatility. Think of it like building a fortress. XRP is your vault, but walls, gates, and supplies, income, investments, education, keep the structure intact. Leverage, used intelligently, can be a powerful tool. Once XRP reaches collateral grade status, recognized by ETFs, banks, and institutional lenders, it can be used as collateral rather than sold. But leverage without understanding is dangerous. Investors must practice due diligence, learning to evaluate private equity debt instruments and real estate opportunities. Ripple's integration into institutional systems is unprecedented. The launch of RLUSD, an institutional-grade stablecoin on the XRP ledger, opens DEFI participation to banks, hedge funds, and treasuries. Lending, staking, and settlement operations will use XRP as collateral, creating a feedback loop of demand. Combine this with ETF's inflows, Ripple's acquisitions, and the improving macro backdrop, and the trajectory from 2 to 10 to 50 to 100 becomes beyond realistic. Not because of hype, but due to supply-demand mechanisms at scale. But historically, infrastructure-driven adoption, like Visa's early integration with PayPal in the 2000s, often catalyzes multi-year exponential growth. So, where does this all lead? From macroeconomic shifts to Ripple strategy, ETF approvals, and disciplined investment mindset, it comes down to one principle. Patience meets preparation. XRP is quietly evolving into the backbone of a global settlement network. Every acquisition, partnership, and integration is another brick in the foundation of a new financial era. Holding XRP until 1,000 isn't about obsession with price, okay? It's about building conviction, education, and positioning to survive and thrive through volatility. So at $2.50 XRP today isn't that ceiling, it's your entry ticket. Those who understand value in every financial revolution, like the early Amazon and Google investors, become the ones who rewrite the rules. So stay focused, watch the macro developments, ETF inflows, Ripple acquisitions, and institutional positioning. And while others panic or chase headlines, remember the architecture of the next financial system is being built quietly, and XRP sits at its foundation. Hold strong, stay disciplined, prepare to participate in a transportative era of digital finance. Whether XRP eventually hits $10, $100, or $1,000, the prepared will thrive not just financially, but mentally. That's the lesson history teaches. Fortune favors the patient, the strategic, and the informed. Thanks for watching, and I'll see you in the next episode of the Crypto Republic. This opened your eyes. Smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.